All right, ladies and gentlemen, we're back. We're back, baby. Bigger than ever, stronger than ever, ready for today's video. Thank you very much for watching. I appreciate it. So, there was 3 questions I got. I'm going to answer those 3 questions at the end of the video to help those 3 people. So, what we're going to be doing today is we're going to be going over 6, 7 pairs, I'd say, 6, 7 charts, just talking about the higher time frame level and anything that might be going on. I also messaged you guys asking you guys, hey, what are the type of videos that you guys want to see? That was in that email in the post that you guys signed up for to grab that odds enhancer sheet. Thank you for getting back to me. Basically, out of the 10 replies, I got 10 replies. 9 out of 10 of them were asking me for more top-down analysis videos and going more in depth into the methodology. Now, I have no problem doing that. I will be doing those maybe at the end of the week. And just so we can take it step, maybe just go over some trade examples really quickly and just kind of dive deeper into the methodology about what my thought process was and stuff like that. So maybe that will be a video. Maybe we'll do a live stream sometimes, and sometimes we'll just do it recorded. I don't know. I'm just kind of figuring it out as I go. So that's going to be more later in the week. And now I would like to bring a video like this where I actually talk about, well, the higher time frame zones. Before we can get down to the top-down analysis, we first have to do a higher time frame analysis. We have to do this part first to understand, hey, where are we on the bigger picture in order to actually do the top-down analysis. So it kind of goes in order. So you guys will see me talking about zones, saying, hey, keep an eye on this zone for potential opportunity. And then maybe at the end of the week, we'll review and say like, hey guys, like what type of trades did you take? So it's going to be like kind of like a mini review meeting. That's what I do with my group. Is on Wednesday we actually do a trade review meeting and we talk about trades that people took, anything good, anything bad, anything that gets brought up, question and answer. So maybe I'll just kind of integrate a meeting or a video like that for you guys because that's like their favorite meeting. So it's like a mini version. We usually go for like an hour to an hour and a half each meeting, and these videos are going to be like 10 minutes. Now, let's start with EURUSD. Let's look at the daily time frame. Obviously, we have this daily uptrend. Prices came back down to that daily demand. Prices have started to take control. Now, I wasn't watching this really on the daily. Well, actually, I've always have been watching this on the daily, but for a potential scalp setup, and a potential scalp setup means, hey, just a smaller time frame trade. I'm looking at those levels. More so this level, I don't like taking scalp setups in a counter trend market. So personally, I see this as a trending market right now. So I'm kind of waiting for that pullback to happen. Then I'll maybe look for execution on maybe the 15 minutes or something like that. That's using that higher time frame. All right, that's something that we learn in week 1 of the Moneyball trading course. Understanding, hey, what's price actually doing? Where is the big money buying and selling? Where are these zones? Okay. Pound USD. I was looking at these areas down here. Daily time frame. This is nice because no potential setup has really occurred right now. Maybe keep an eye, keep an eye on the 1 hour, and we might get a nice little 1 hour opportunity, maybe 15 minutes, maybe 30 minutes if we start rallying out. Let's look at the Dixie and the dollar. I believe we already talked about this into in-depth conversation in our last meeting, but same thing, the dollar coming up into that supply zone. We have actually broken this downward momentum now. Therefore, we have created demand based on the supply and demand methodology. You might be thinking, why is that demand? Well, because it broke the downward momentum line. That's the first indication that price is starting to turn. So we're no longer in a downtrend based on the daily time frame, but we do have a demand zone down here now, and we have supply up here. With prices up this high, we have buyers down here, sellers up here. I would much rather be a seller with the US dollar. Okay? Let's look at the Japanese yen now for a second. I actually found this interesting. Before I recorded this, I was looking at this and I was like, oh, that's interesting. Because here is this demand zone that's been holding price. This kind of rally-based rally demand zone. Tested once, tested twice, tested 3 times. This is the 4th time it's coming down for the test. And I noticed each time it came down, it went down lower and lower and now potentially lower. So this might be the final straw where it actually breaks it. So any longs will be counter trend. or well, should be confirmation. I don't want to say counter trend. Should be looking for confirmation. Go back and look at the tips videos that I have produced on my YouTube channel. Okay. Let's see. This is a demand zone that's happening right now. Gap up. It's a pro gap. So definitely I would be wanting to look for buying opportunities, but I'm going to keep an eye on maybe the 4 hour to show me evidence. And then obviously if this demand and this demand gets broken, keep an eye on the yen pairs to have this demand zone coming in. So a potential stronger yen currency when prices get down into this area. So as of now, I am bullish the yen because we are sitting in demand. I just haven't seen an opportunity yet. That actual USD yen, I think that was actually one of the questions. It says, what was your analysis on the yen? Well, obviously that's broken now, that supply zone. So here is the supply zone above now. Before, this was the supply zone. We broke upward momentum, we removed demand, demand, demand. Prices came straight back up, and now it's broken through. So if prices manages to come up here into the 1 hour, or sorry, to the daily supply zone up here, we are probably going to have the yen coming down into the drop-based rally demand zone down here. So that's going to be a nice kind of a counter trend futures correlation trade setup. Okay, New Zealand yen. Let's look at this now. This is an area that I would keep on your radar for the next coming days. As a higher time frame, prices are coming up into that daily supply zone rally-based drop. Kind of broke that upward momentum, kind of removed demand, so therefore we have supply. Definitely a higher time frame area where I'd want to be looking for selling opportunities. And the same thing is with the yen. We look at the Aussie yen, have that same thing. Breaking that upward momentum, removing demand, we have supply in there. Right? So those are two areas that we are currently watching too with the team. That should be it. Let's go into the questions now. We're going to try to keep this quick because I got to run soon. USD yen we talked about. How are zones made? This was a question that I got. Well, obviously, I directed them to my tips video about how supply and demand zones, or how the supply and demand methodology works, what's the understanding behind it, how to draw and how to identify zones, but how are they actually created? That's a good question. It's probably one of the top questions I get. It's not a frequent question, but it's like a very good question to ask. Well, everything you see, because some people will say, well, it doesn't make any sense. You're talking about unfilled buy and sell orders when you're talking about supply and demand. And then they say, well, look at the chart. And I go, okay, I'm looking. And they say, what do you see? Well, technically, they are all filled buy and sell orders. The only reason prices manages to go down, like just 1 pip, is because it's a sell order. That means the sell order got filled. So then people will sit there and say, well, then they're not unfilled buy or sell orders. They're filled orders. So that makes the methodology invalid. If that's your point of view, by all means, that's good for you. This methodology is not meant for you. I don't know how that person managed to come across my videos then. Maybe they are interested in it. That's okay. That's totally cool. So here's my response to that question. How are they made? Obviously, they are made by buyers and sellers getting filled. Now, what we are trying to do is identify these big drops in price or these big rallies in price. Because if we think about it, the only reason for price to go from, let's start it here at the supply, from 75.920 down to 75.902, down to 86.7, down to 79.798, down to 746. The only reason prices can move 1 pip down is because there are more sellers than buyers. All right, it's simply that simple. Simply that simple. That makes sense. Cool. So if we actually kind of look at it at this point of view, at this base right here, this rally base drop, at the very high of this candle, let me put a marker down so you guys know. This is so going to go over 10 minutes, I know it. The high is what? Let's see, 76,543. So at 76,543, there was not a single person in the world that was willing to buy this 1 pip more, not even zero point 0.1 pip more. It's the same thing with stocks. If you go buy Tesla at say $200.52, oh, let's just go to Tesla for example. I don't want to screw this up. Obviously, we're at all-time highs. So this is kind of interesting because we are at all-time highs. All-time highs. It is 520.37. Okay? If people want to bid it up, they have to find more value in the person that's selling. The person that's selling to them and saying, hey, maybe I'm taking my target. Maybe I've tried shorting it from back here. I'm getting stopped out. But the person that is clearly buying thinks that this thing is going to continue going up. But let's just say, for example, prices start to fall. At this moment, at 525.63, there was not a single person in the world that was willing to bid it up 1 cent higher. Not a single person, or else his prices would have gone that high. So at that point, the sellers finally took control and said, okay, begin selling, begin selling, begin selling. That's how price moves, right? It's just buyers and sellers. So if we assume that there is a big imbalance, let's go back to our New Zealand yen, and we see a strong imbalance like this. Price is moving down strongly. We can assume, hey, if this is a market that is, $5 trillion a day circulated in the market, clearly they can't just go to the market and push sell and sell all their orders because they're going to crash the market. So what they might do is they might stagger it out, saying, hey, I'm getting in that extra commission if I manage to sell my position at 73.1 from anywhere to 73.1 to 73.5, I get a bonus commission. So they're going to try selling as much as they can without moving the price down, right? So next time prices come up, they might try to get more out, more out, more out, more out. Keep selling. They want to make that extra commission, the broker possibly. Maybe they have such a big sell order book that they just want to sell, but they just can't push sell because it's just going to crash the market, right? So that's how basically the supply and demand zones are made, is by buyers and sellers. And there's that kind of question that somebody asked me a while ago, I think a week ago. Next question. Support and resistance versus supply and demand. Very interesting. Let's talk about this. AUDUSD. This is an example that we were talking about in the meeting. Well, because support and resistance traders, this is common. People say, well, what's the difference between support and resistance and supply and demand? They are completely two different things. Their theory-wise goes completely against each other. Completely. But usually they're kind of similar because they buy and sell in the same areas, okay? So if you were to ask a support and resistance trader where they want to sell and where they want to buy down here, in this picture right here, they're probably going to say, well, I want to be a seller here and I want to be a buyer down here. Why? Well, because clearly there's support, there's support, there's support. The more times a support line or resistant line is tested and respected, the stronger it is. That's in their head. That's in their methodology. That's in their theory. The more times a zone is tested, the stronger it gets respected. The higher probability it is. Now for a support and resistance trader, for a supply and demand trader, that goes for the complete opposite. Because we want to look for fresh zones. Because if we're assuming, hey, there is a big institution here trying to sell, like, say, 100 million sell orders, they could only get off, they're instructed to sell 100 million sell orders right here, up in this area, right? So maybe they get tested, um, you know, 20 million, okay? They only managed to get 20 million off down here. Prices come back up, they rifle off another 20 million, okay? Now they've gotten rid of 40 million. Prices comes up, they get rid of 50 million here, right? So now each time prices come up, there's less and less buy orders. That actually goes, that's talking about the yen. Let's look at that yen pair, for example. So clearly, this is just how I see the market. You could say you're completely wrong. By all means, that's okay. Thank you. Here is the demand zone. Clearly, some institution Some big money found value in this area. Why? Because there was a strong rally out from here to here. Buy, 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 right? That's a lot of buy orders coming in. The sellers got wiped out. So maybe the next time when prices come back down, they didn't get all their buy orders filled. Maybe they still see the same value as in price down here, as it was down here before. So they see it as a discount. So what did they do? They buy. Okay, we need to buy 100. Say we need to buy 1,000,000 buy orders. Say screw it, we're calling it 1,000. Just say 1,000 to keep it simple. We need to buy 1,000 buy orders here down here. So maybe they get rid of 200, right? They buy 200. Prices rally up. Prices come down. They buy 200. They rally up. Now they have what? 800 left. Prices come down. They manage to fill 500. So now prices rally up. Now they only have 300 buy orders left. Now prices come down deeper in. Prices have to go deeper into the zone in order to find the next stack of buy orders. Prices come in, they get their 300 buy orders filled, and they take it up. All right? And now for the fourth time, maybe they're just not here anymore. Maybe they have no more room to buy anymore. Maybe they're out of the position. So prices could completely just fall. We're going to take a probability-based chance, right? That the zone that previously worked will work again if it's fresh or barely tested. This zone has been tested once, twice, 3 times, 4 times, and each time it's gone into it. It's gone deeper into the zone. That's concerning to me as a supply and demand trader because prices have to go deeper into it. Okay, so back to this Aussie New Zealand. The support and resistance trader would love to be buying down here and selling up here because clearly that's where the sellers are stepping in and this is where the buyers are stepping in. Okay. Now that, we are usually buying and selling in the same areas because for supply and demand traders, this is why you hear me say, hey, I want to look for confirmation though. I'm not just going to simply buy down here and sell up here. Here is a demand zone. I'm going to wait for confirmation, meaning I'm going to wait on the daily time frame to see prices starting to do this. That's what you're going to see on the daily time frame. Prices starting to turn, and I'm going to try to catch those pullbacks. Okay, that's it. I think I described them pretty well. I'd be pretty surprised if anybody's still in this video watching. But hey, thank you very much for watching, guys. I appreciate it. If you guys have any questions, let me know. And if you guys like this new format of the videos, this will be kind of just talking about higher time frame zones. Maybe I'll answer questions on the trade review meeting and something like that. I don't know. I'll figure it out as I go, but your comments are welcome. All right. Thank you very much. And that should be it. Cheers. Peace out.